Aloha, everyone. Welcome to Java. Good morning. It is Tuesday, October 31st, 2023, the last day of October, and also Candy Inflation Day in the US. I'd like to say a special good morning to Jules and Stephanie, who's always here, and good day to Quadman. Thanks so much, you guys. I appreciate you. So we've got our MMRI favorite risk indicator still in extreme territory, although it came down. So the reason it came down, the two main elements, the relative dollar strength and the 10-year yield, both pulled back, which is positive for the markets. So watching the markets go green yesterday, still got volatility up a bit, but the surprise is that oil and gold are still staying strong as well. So that's an indication that this is probably not going to last for long, but we'll go over a little bit more of that as well. Futures green at the moment. Not expecting a whole lot today other than the Bank of Japan. Talk about that in a bit. So the expectation is this is going to kind of continue. Green day, upward trend, a little positive, mostly waiting until tomorrow still. So in the calendar, we've got employment numbers, home price index, not too much going on really. Tomorrow is going to be the Fed at 2 p.m., but really it's going to be 2:30 when he comes out and has his press conference where he's answering the questions that the reporters are allowed to ask. So, and they do regulate that. So we've got this short one, sentiment speaks. Bears may get what they want, a market crash. I agree, just not likely today. So we'll see what happens. Sentiment right now is neutral, almost neutral bullish, holding till Wednesday. And we did see the US dollar fall versus the Japanese yen. And stocks go forward, talking about rates, outlook, and earnings. Go on a little more of that. So, one's to pick on, not financial advice, but they did bring this out that these are weak. So, one is PayPal, and they're talking about this underneath structure behind that is just weak. It's not financial advice, but if you wanted to make a play to the downside, JetBlue also, we knew they had some structural issues, but their move has already been down for 11%. You may want to look for the recovery in the oversold, but the structure of that company underneath is having some serious headwinds. So for oil and energy, we have this came out, the World Bank, which is another branch of the US basically, saying oil could soar to a record high of $150 per barrel if the war escalates further. We know the war is going to continue. Oil right now has pulled back a bit. However, I do expect that even with the lower demand that they're expecting during this next recession will be temporary, and that will advance from there as well as inflation. So Germany, looking for other sources because they are tremendously energy dependent for their GDP, for the growth in the manufacturing. So they are looking to Africa now, and with the move against colonialism and the move against France, basically, lately, in general for Africa, the resources kind of opening up. So now Germany is trying to open the doors to negotiations there. There are also stories coming out about their inflation at the lowest since 2021. Well, low inflation, deflation, or depression are all similar terms, depending only on degree or kind of sentiment of how you want people to feel about that. So lowest inflation, they're basically they're in a depression. And unless they pull out of this with their energy costs, they're going to be in trouble because they've been paying higher costs for rebranded Russian oil. So central banks, people are looking at the Federal Reserve. Now they're moving to the US Treasury since the Federal Reserve is kind of in a corner to where they have to hold their rates. They can't really raise much more if they do one more interest rate hike. So now they're watching US Treasuries because if the Treasury decides to sell a whole bunch of their, the market watches the 10-year, but if they dump a lot of 30-year or the short-term 5-year, 2-year treasuries, that could dump the prices and spike the yields. So they do have that capability. I don't expect them to do that, but that's why this is in here, to just give a short explanation of that, just in case you're new to that. So And I thought this was interesting. Global central bank gold purchases, we kind of knew this, they reach a record high for the first 9 months of the year. So central banks have been kind of bolstering against what they know is coming. They're killing their own currency by design, inflating. Inflating is a way to steal from the people, then they're bolstering, purchasing with their own printed money, the gold, and then inflating away the value of the currency. And this is why we have wars. Cover this up afterwards. So we've got the Fed's reverse repo facility drawdown. So with their balance sheet debate. So this is their shell game, basically, creating borrowing for these other companies and then swapping it overnight. It's a game they're playing to keep everything looking like it's still moving, and it's having serious issues right now. This is the credit freeze and the liquidity lockup that Greg talks about and that others are talking about that is looming. So we have to keep an eye on this. Okay, now on to the Bank of Japan, which we were speaking about. So today, their report spurred the speculation. They're talking about controlling their yield curve. So when they finally put a cap, they've been letting their rates float, and that was killing their currency. Well, they finally put a cap on their rates, saying that they wouldn't just be endless. So the yen actually strengthened against the dollar. So what they're doing is trying to increase their purchasing power because the whole thing with the Fukushima water and the China ban had caused some issues with their economy. So now the US military, of all places, is bulk buying Japanese seafood. So this is another quantitative easing that they don't even talk about this. You don't even know about this, but it's a way that they're using spending. And since the spending went through the US military, they're able to bolster another country through purchasing their goods. So I hope the military likes seafood. We've got these other stories kind of to show. So talking about Britain's, but the US is really between 3 and 5 months behind. They are a good harbinger. And they're talking about how they're in the most arrears since the financial crisis. So they're rejecting their debit card payments and having issues with this, with their higher cost of living because of inflation. Along with that, the mortgage approvals are nosediving. So they don't have any more money. They don't have enough money to put their down payment. So now they are basically getting denied for their mortgages. And we're going to see this in the United States as well, putting pressure on the housing market. BlackRock has been the one that has been buying these up, not just in America, but across the world. So in the United States, I wanted to bring up this graph is from the Federal Reserve Bank of Dallas. So these are lagging indicators, but they're already showing the divergence. So looking at the single family housing permits, so these are the ones that they can build versus new family houses sold. And you can see the spread already occurring. And we're like a month and a half, 2 months from this. You can see how you get new permits, nobody buys. It's going to cause an issue here. So with this, we have, this is from Associated Press. They brought out the Morning Wire, and I wanted to bring this in because it basically has a good summary of what's going on. It's saying that basically the Fed will keep their key interest rate unchanged, but they've also made clear that they're kind of watching the economy and they may do one more hike. So they're leaving that open. They don't want to shock the market because they can't afford to do that. So we've got a lot of households pulling money from shrinking pool of savings and others turning increasingly to credit cards, as we were just seeing in that other story. Well, not just credit cards, but they're also turning to companies called Affirm or SoFi to do temporary financing down to the cup of coffee. So if you have to finance a cup of coffee from Starbucks, that's not a good indicator. So, but in the other coverage, I wanted to bring this in. They're saying the US economic growth is strong at 4.9%. Well, they're paying 4.9% because the prices went up, not that they're buying more. They're buying the same, but the prices went up. So kind of garbage reporting. Anyway, through the Federal Reserve Bank of Dallas, they do release the Texas Manufacturing Outlook survey And so basically, they kind of asked business owners in this sector, retail, manufacturing, and then also the metals. And out of this, they get comments from the business owners from the very top. These are the people that are producing. So I thought this comment was interesting, talking about credit intermediation and the related activities. So saying they just refinanced all of their debt, $500 million worth, with multiple term sheets and favorable advance rates. However, their cost of funding was materially higher because of rise in rates, of course, and the widening of spreads. So credit is available, just much more expensive. This in turn is forcing us to raise prices to consumers. So as I said before, businesses are not going to pay these costs, they're going to pass them on. So inflation will go up in the long term. We're going to have the short term lack of demand when it crushes out a lot of people's spending, but when it comes back, it will come back tremendously. So, with that, that's all I've got for you at the moment. I wish you all a green trading day, just a wonderful day in general. And until I see you again, my friends, stay free.